Morning, good afternoon, and good evening, folks. I hope all of you guys are well. First things first, if you guys can hear me well and if you can see my screen at the same time, please do give me a sound check by saying yes or no so that we know that you guys that there are no communication issues, basically. So, once again, if you guys can see if you guys can hear me and if you guys can see my screen, thank you, Jacques, for confirming that, and a few other people who are confirming still. Thank you very much, and happy new year to begin with. It's a great pleasure to be with you guys once again over here. In this series of masterclass, we always cover several different topics covering cryptos, Forex, stocks, and of course, special events like the one that we are covering today, i.e. the US non-farm payroll data. This year, we would be increasing the scope of this master series further by encompassing some commodities as well. So in the coming months or weeks, you will be hearing from us in relation to new masterclass series in which we'll be covering in a lot more detail two specific commodities, and those commodities would be your gold and of course crude oil and Brent. So basically gold and oil will be the two different commodities where we will be holding several different master series as well, telling you guys, helping you guys what to look out for, what is really important in relation to that, and why that is important, and how can you make a more informed sort of a decision with our help if you continue to attend these webinars. Now, a bit about myself. I come with a wealth of 15 years of trading experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon, as an equity trader with Bank of America, and currently providing services as a chief analyst for AvaTrade. Now, if you are new to this, it is important for me to go through these disclaimers and risk warnings, which are right in front of you. If you do have any questions in relation to that, please feel free to get in touch with your own account managers who would be more than happy to help you in relation to those queries. Now, bit of a housekeeping, the contact details for our social media channels. So for Twitter, it is obviously AvaTrade, and for YouTube, it is the same as well, where you will find our daily technical analysis video and several other videos as well. In fact, the recording of this particular webinar will also be available there as well. Something which is very unique to AvaTrade, and I would like to share that with you guys as a proprietary or as an exclusive product to you guys that we have at AvaTrade, which no other broker offer, is the AvaTrade's unique technology, which is a revolutionary one-click risk management tool available on the AvaTrade web trader and AvaTrade Go app. With AvaProtect, you can purchase protection against loss for a defined period after opening a position. If the protection ends and you have an open position that is losing, AvaTrade will reimburse the loss directly into the trading accounts. The only cost is the AvaProtect fee itself. Again, if you have any questions in relation to that, please feel free to contact your own account managers. Now, the agenda for today. Now, some of the study questions are in front of you, and some of you would have actually already gone through these specific questions. But the beauty about this one is that every time the scenario kind of changes quite a lot, the landscape shifts, the curves move from its normality, and there is an enormous amount of a noise with respect to the new fundamentals coming in, and these particular webinars help you to articulate a more informed decision in relation to your trading. And one thing I highly encourage in these webinars is, if you have any questions in relation to anything that I am discussing, please feel free to shoot those questions straight away, because there is no such thing which is called a bad question or a stupid question. If you don't know anything, just ask them. This is your opportunity to gain knowledge, to gain some experience, to drive more wealth from my experience of over 15 years in the industry. Now, the first question first, importance of the US NFP. Why the US NFP is so important. But before that, for those of you who are new to this particular room, who are new to trading, do you guys know what really is NFP? What do we mean by NFP? So if you have any suggestions, please write them over in the chat box. That will come to you. Great, that is a great answer. So the US NFP, it basically stands for non-farm payroll data. Thank you very much, Luke, for the answer. These data points are very, very important, because that is Nico, that is absolutely perfect, and I am going to explain that in more detail. So US NFP, obviously this is the non-farm payroll data. In simple words, this is the jobs data for the US economy. It only comes once a month, and this is the most important number for the US economy. Why? Because the Federal Reserve, which is the central bank in the United States, also pay close attention to this particular number. The stock traders pay attention to this particular number. Every particular person pays attention to this number. If the number is great, we are likely to see the stock market moving to the upside. If the number isn't strong, then we are likely to see a momentum moving to the downside, driving the markets to the downside. This is the kind of importance. And the importance of this particular US jobs number doesn't even stop over here. In fact, it sets the tone, the trading tone, for the rest of the month, for the and for the rest of the upcoming weeks as well. And it also influenced the EU markets as well at the same time. EU markets moved on the back of this particular data as well. Asian markets also move on the back of these particular data. It is such an important data. Now, the question, really the next particular question which you may wanted to ask at the time is really that why this particular data, sorry, when is this particular data comes out, and what time does it really come out? This particular data, give me a 1 second there, please. Just bear me. Sorry about that. So when this data comes out, this particular data comes out on the first Friday of every month, pretty much 99% of the time. This data comes on the first Friday of every month. That is the most important thing about this particular data. So again, on first Friday of every month, this data comes out. We will see a lot more information in a bit. And this data is released at 13:30 UK time, 13:30. You can change the time according to your own time zone. So at 1:30 p.m. on the first Friday of every month, this particular data comes out, and this moves the entire market. That is the most important thing about this particular data, which you really need to keep in mind. Now, what makes the US NFP reading? So basically, in other words, what are the ingredients for this particular one? Now, in order to do that, we will we will leave this question for the time being, because I wanted to take you to the economic calendar and then walk you through some of those readings, because one of those important readings would be coming out today as well. So let me just pause this particular screen and let me bring out let me just bring that out right now, because that data, the one important piece of that information is going to be coming out today. So let me share that screen with you to show you really what we mean by that. Now, I'm sure that you guys can see my screen again. Now, this is the data. That's one of the ingredients right here. So let me clear the screen from all the previous markers. So here it is, ADP non-farm employment data will be coming at 1:15. This is a very, very important piece of information. It is going to be coming in 3 minutes. Now, this is the private market data. On Friday at 1:30, we are going to get the overall picture for this one. But generally speaking, this particular number, the ADP number or the private employment number, sets the tone for the US NFP. If this comes in strong, market participant usually believes that the Friday number is also going to be coming will come strong as well. If this doesn't come strong, then market participants become a little bit more worried about that. Another important ingredient about this particular one also is the ISM manufacturing PMI data, which came out yesterday. As you can see it right over here, it came out at 3 p.m. yesterday pretty much, and this data was very much underwhelming because the expectations were 60 and the actual data came in 58. So basically this data was telling us that the number wasn't really that great as market participants were really very much expecting. Now on Friday, I'm going to take it to, not Thursday, I'm going to take it to Friday. I'm going to show you where this particular number is going to be coming in. So now you can see that we are looking at the Friday's calendar, and over here is what we have, the US non-farm employment change coming at 1:30 on Friday, at the first Friday of every month. That is when this particular number comes. The expectations are 426. Previous number was 410. As long as the number matches this particular number, the actual one, which is going to be coming over here, we are likely to see better reaction in the stock market, which could push the market higher, stock market higher, and vice versa as well. Some other numbers that you may want to pay attention to is the US unemployment rate as well. This is expected to fall further from 4.2% to 4.1%. And average hourly number also needs to be improving as well, meaning more people are working on hourly basis. So these are the sort of ingredients that we really very much we need to focus on. Now, how this data is really going to be impacting the market, I'm going to go back to this particular ADP data, which is due to come in less than a minute. And now we're going to view the reaction, the actual trading opportunities right now live into the market. I'm going to go to the US 500 index, which is the S&P 500 index. You can see that right over here. And this particular one is going to see a massive move to the upside or to the downside, depending on the number. We are also going to see a big moves in the gold prices as well. Now, gold prices are already moving to the upside, meaning the data investors are expecting that number to be low, but here the data is already out. You can see gold prices are moving massively to the downside because they moved from 1820 to 1817. And if we look at the US particular US 500 on the 15 minutes as well, we can see that that is moving to the upside. A more encouraging number must have been released right now. So let's go and then check the number. What was the actual ADP number? The expectations were 405. The website hasn't updated the actual number yet, which we should see that any minute, but I can maybe check it on some other platforms which could really give out the number. So again, the number isn't still updated on the website. We are still very much waiting for this particular number to come to see. Again, let's go back to the reaction in the market. What is the reaction in the market? The reaction in the market is still very much the same. it is telling us that the prices it's a risk on rally because the market is moving to the upside. It is expected that the number, so there you go, the number came out at 807,000. Very strong number really came out from the US economy. It has produced a number of 807,000 jobs were created. It is a number which is double the expectations. Remember, we were expecting the number to be 402, but the actual number, if I just bring this one back up, so there you go, 405 was expected, the actual number is 807. This shows you the strength of that particular number, the US economy. Hence we're seeing the momentum going to the upside. And of course, the reason is the gold prices are moving to the downside is because traders see that like the dollar index has fallen. Now if I bring the euro dollar to show you guys over here, we will see pretty much similar reaction over here as well. So basically the dollar has moved to the upside and the euro is falling on the back of that. So this shows that the euro, the dollar is more stronger currency now, and the euro is falling. So some of the currencies, so what could we, and the same is going on over here as well, I'm pretty sure. In terms of that, again, we're seeing a momentum to the downside. So overall, what has happened, now let's recap what has happened. At 1:15 today, we had the private employment data for the US economy, which was expected to come at 405. The previous number was 534. The number came twice as better as the expectation. This has set up the tone for the actual data, which is going to come on Friday, to come very big. The US ADP payroll rise was the largest since May. So in other words, today's number was the biggest increase since May. Now traders are expecting this number to be strong, the actual number to be strong on Friday. In terms of an instrument, what happened is that we saw the gold dollar moving to the downside, a dollar moving to the upside. We saw that. We saw it against the euro as well, with the euro started to go lower because dollar is strong. Again, in the gold prices, we're seeing that as well. The price moved from 1820 to plus level to 1817. In the risk on rally is very much on, because now we see the US 500 moving to the upside, and we can pretty much see the same sort of a reaction for the Nasdaq as well. So all of these particular assets have moved on the back of that, really giving you great opportunity, great those moves. Let's look at the BTC market, the Bitcoin market as well. Bitcoin market has actually reacted positively because the risk on rally is very much on, and that is really pushing Bitcoin prices as well. So traders are feeling a bit more, they feel like that they can actually take more risk on the back of this particular data. They feel more confident, and then hence we are seeing Bitcoin prices moving to the upside on the back of this particular number. Any questions, folks, so far? Yes, Luke, thank you for sharing that number. So Jackus, you're saying the housing data? No, the US non-farm payroll data basically tells you what sort of jobs are created in various different sectors. It doesn't contain the housing data. So it really shows you where the jobs are created. So Jackus has asked us, he's made a comment, which is a very intelligent comment, and he's talking about that the US non-farm payroll data actually covers the housing data. I think what he meant to say really there was that the US NFP data it actually shows us all sort of employment in various different sectors of the economy. So I think that is what he meant to say over here. It seems like that this will affect oil prices too. Henry is saying that this is also impacting oil prices. Yes, because the US employment market is becoming stronger, so we should see important improvement on that side as well. Right now we're seeing a little bit retracement because of the dollar index going to the downside, but overall this is a very positive news, and it should push the oil prices to the upside. So now In the last 10 minutes or so, what we want to do is we wanted to do a bit more technical analysis on the prices. We wanted to see what exactly is going on in terms of our prices and where do we see the big levels sort of forming in terms of the major indices. Now, when we look at the S&P 500 index on the daily time frame, something that we really see over here is a massive momentum to the upside. Look at these particular moves. Like since the price formed in 2020, it dropped. We saw this rally ripping to the downside. We did see small retracements over here, right here, when the price kind of moved. We saw a bit of a retracement over here, bit of a retracement over here, small retracement over here. Again, another small retracement. A very small retracement happened just fairly recently where the price kind of tested these particular price levels. So let me define what are those particular price levels. This one over here in green is your 200-day simple moving average. This one is your 100, followed by that is your 50-day simple moving averages. What are moving averages and why are they so important? Well, moving average is nothing but the actual average of the price for the last 200. So this is the last average price for the last 200 days, and then this one is for the 100 days, and this is for the 50 days. When the price is trading above or below that significantly, it shows that the prices are overly expensive or they are overly cheap. So right over here, when the price kind of moved quite away from the 50-day simple moving average, we did see the prices moving to the downside, and we saw the price coming back towards its mean, and that those circumstances, the mean was 50-day simple moving average. But more often than you can see from here is that the price barely touches the 200-day simple moving average. Throughout this particular period from here to all the way to here, we had only one point over here where the price came towards this 200-day simple moving average, the other point over here. So the price came towards its 200-day simple moving averages. So what this tells us that every time the price kind of comes close enough to its 200-day simple moving average, it could be a great opportunity to buy the overall market, buy the S&P 500 index, because usually the price bounces from there onwards as well. But sometimes a price, when it is very much oversold, as you can see over here, that the SF 200-day simple moving average was right over here, while the actual price was over here. This usually happens in only exceptional circumstances, like when the COVID kind of happened, the price was well away from its 200-day simple moving average, and this is a great opportunity right over here to buy. These are good opportunities to buy. This is a great opportunity to buy. Now, as you can see that the price currently is trading quite far away from its 50-day simple moving average, the chances are that we are likely to see a reversal once again towards this particular price level over here, towards that 50-day, towards the 100-day, towards the 200-day simple moving average. It is likely that we will see that. When will that happen? What will trigger that sell-off? Obviously, the Federal Reserve minutes, which are due tomorrow, could of course do that, some of that part as well. Which are due today. And then on top of that, we do have some other factors as well, like the Omicron, which isn't really a major concern, but it can certainly do that. Now remember, the FOMC minutes, they are coming today at 7 p.m. So that is the second most important event for today, which you should be watching very closely with your eyes completely open, because this particular event is also going to move the markets quite massively as well, because when minutes will be released, traders will be watching those minutes very closely. So overall, the S&P 500 index is overbought, and then it's not a great time to buy because the index is pretty much expensive. Now, as for the US 30 or the Dow Jones Industrial Average, what we see over here is the price taking out the previous resistance. The resistance was formed over here. The price took it out. Now we need to have a new resistance level, which is going to be the new all-time high. Now, in terms of the buy area, I'm going to mark it near the 50-day simple moving average, just right over here. Now, again, the same theory, same concept, we're going to use that over here. The price is trading right over here, which is quite far from its 50-day simple moving average, and confirming this to us that prices are way too expensive. Even the RSI is reaching to 70 mark as well, confirming that to us that the price is more likely to see a retracement very time soon. Because the last time the RSI was kind of close enough to these particular levels over here, we did see a retracement, and then again you see that when the retracement happened, the price went below the 200-day simple moving average by 3%, or into this area of support right over here. It was a great opportunity to buy, because after that price did move significantly to the upside. So for the Dow Jones Industrial Average, a great opportunity to buy is not near the 200-day simple moving average. In fact, it is below the 200-day simple moving average by at least between 3 to 5%. So over here, this was only 1%. If we just make the chart a little bit more shorter, more longer, so you can see that again this is one incident when the price came close to its 200-day simple moving average. Over here we did see the violation by 1 or 2%. Over here it was definitely over 2%, and then over here was within the 1% range of that violation. So every time the price kind of violates and goes into 2% to 1 to 2% category from further below from that, that represents a great opportunity for us to really look at the price action from there onwards, and then really trigger those buy trades on with respect to that. Now, of course, the time is pretty much we are done with the time, and the recording of this particular webinar will be available on our YouTube channel. Feel free to watch that over and over just to make sure that you guys understand the concept of this particular webinar. And overall, the sentiment is quite strong for the US non-farm payroll data, which will be coming out at 13:30 on Friday. Watch it, and then look for these particular elements, look for these particular asset classes which we looked at, because they are likely to move massively on that day as well. And thank you to everyone for attending, and I hope to see you guys next time, same place. Until then, adios.